Our economic system keeps some people rich at the expense of everybody else. Now, this might sound mean, but that's exactly what our economic system is designed to do. Now, there's good news and there's bad news. The bad news is if you don't understand this, if you don't understand the economic system, if you don't understand how money works, you are going to be the person that's paying the price, and you're going to be the person that's making everybody else rich, and you're going to be the person that can never understand why you can't get ahead financially. The good news is once you understand this, once you understand how our economic system works, once you understand financial education, now what you'll see is that becoming wealthy really isn't that hard. And once you understand this, you'll also see that you are in control of how much wealth you'll build. Not your boss, not your government, you are. And if you stick with me until the end of this video, not only are you going to understand better how our economic system works and how you can build a financial education, but I also have a free ebook on how to build wealth as an investor that if you stick with me until the end, I'll show you how you can get a copy of this ebook for free. Let me show you why the average person is struggling to build wealth in today's economy. In 2023, you would need $6.93 to buy what $1 could back in the year 1973. That means we have seen an inflation rate of around 600% over the last 50 years. At the same time, the median household income in America for white families, according to the United States Department of Commerce, was $12,600 a year. And as of 2022, the median household income in America was $74,500 a year. This is according to the United States Census Bureau. That is a growth of just under 600% over those almost 50 years. Now you might look at this and say 600% inflation on the price of things and 600% inflation on household income. It looks pretty even, except you're missing one key point. In the early 1970s, household income was based primarily off of one income, versus today, household income is based primarily off of two people's incomes. That means that people's incomes have risen, except they haven't risen fast enough to keep with the higher cost of things. In fact, now you need two people's incomes just to keep up with the higher prices of things, which means what's going to happen 10, 20, 30, 40, or 50 years from now? Are we going to need 4 income households to continue surviving? Well, this is where it is important for you to understand why our money has changed over the last number of decades, because well, what's going to come in the future of our economy? Now, to really answer this question adequately, you have to understand our money and what controls the value of our money, because $1 today clearly does not have the same buying power as $1 did back in 1973, and the reason for that has to do with inflation. But before we just get into inflation, let's understand now how our money has changed. And the way to understand this, or one way to understand this, is by taking a look at a United States national debt. In 1973, the United States government had about $458 billion in national debt. You'll see why this matters in just a minute. Now, if we were to apply that same around 600% inflation rate, rounding up, that would mean that the United States government would have around $3 trillion worth of national debt today. But that's not what we actually have. Instead, what we have is around $34 trillion worth of national debt towards the end of 2023. That's an increase not of 600%, but of around 7,400%. That means the government has been spending a lot more money than what they're generating from taxes, because our United States government really has one source of income, and that income, if you want to call it income, is through taxpayers, through tax dollars. So when you go to work and you generate an income, or when you make a business and your business makes a profit, these things are taxed. And when you pay taxes, that's how the government generates their money. Now, when the government generates this money, these tax dollars, they can take these tax dollars and spend it to things like infrastructure or new investments that the government wants to make. But if the government spends money that they don't have, then they have to finance this spending somehow. That's why we have this type of national debt. Now, clearly the government has spent a lot of money that they don't have. So how do they finance this spending? Because the government can't print money out of thin air. Our United States government does not have that ability. Instead, what they have to do is they have to borrow this money. Now, they can borrow this money from people like you and me and other countries, but many times that's not enough money to finance the government's spending. That's where the government then has to go to this entity called the Federal Reserve Bank. Now, this Federal Reserve Bank is known as a central bank here in the United States, and they have the ability, the special superpower to print money. Now, I want to give you a little bit of insight onto the Federal Reserve Bank, because although they're called the Federal Reserve Bank, they're actually not a bank. You and I can't go there to deposit money. They're not a reserve because they don't keep any cash reserves anywhere, and they're actually not federal. They're not supposed to be a part of our government. They're supposed to be an independent entity. And I say supposed to be because sometimes you'll see a little bit of political pressure by the government onto the Fed and vice versa, even though they're supposed to be independent entities. However, if you go to the Federal Reserve Bank website, it will tell you that it is not a part of the federal government. So now you have the central bank, the Federal Reserve Bank, which has the ability to essentially print money. Now, if the Federal Reserve Bank can print money, they can then lend this money to the United States government when they want to spend it. Now, the reason why they can print this money essentially out of thin air and give it to the government is because before 1971, our dollars were backed by physical gold. But then in 1971, President Richard Nixon severed the tie between the gold standard and the dollar temporarily. However, that temporary severing of the dollar and the gold standard hasn't ended, and this gave the ability for the Federal Reserve Bank now to essentially print money out of thin air because the government doesn't need more wealth, it doesn't need more gold to justify more money printing. So now, if the government wants to go out and spend money, if they want to go out and do $1 trillion infrastructure package or spending bill or finance, whatever they want to do, whether it's in the United States or outside of the United States, they can then turn to the Federal Reserve Bank to print this money. The Federal Reserve Bank will then create this money, give it to the United States government, or lend it to the United States government, and then the government can go out and spend this money. Now, this creates a boom in the economy in the short term because it creates more dollars, more money gets spent, more people have jobs, more businesses make money. This is good in the short term. However, there is a consequence to this money printing and this money spending. And the consequence is, well, inflation. We saw the impacts of inflation after the money spending during the pandemic because all this money creation, all this cheap money created this huge demand. It created all this ability for people to spend, which caused the prices of things to rise. And so now, if you look at it for a longer period of time, like we looked at it between 1973 and 2023, what we've seen is that the prices of things rise faster than incomes. So now, when you look at all the things that are happening in the world today, the question is inflation going to stop being a problem tomorrow? And it doesn't look like it will be because, well, we still have all this government spending that's going on. And it doesn't look like that's going to be stopping anytime soon. And we still have the inflationary issues that we're seeing today. So if inflation continues to stay around, and we expect inflation to stay around, well, that means that you can expect the prices of things to continue to rise faster than incomes, because that's what it has done in the past. And if that continues to happen, if wages don't continue to keep up with the higher cost of things, because many times what we've seen happen is that the prices of things that you need have risen faster than wages, faster than the average inflation rate. For example, housing costs have grown significantly faster than the average inflation rate, and they've grown significantly faster than people's wages over the last few years. And so this is where now you have to understand this problem is not going away. And the average person is completely oblivious to how inflation affects them and how this works, while at the same time, you have some people, the people that I like to say who are more financially educated, who understand this, well, they get to reap all the benefits. Because if you are financially educated, now you own a piece of the economic system. Now let's think about this. If you own a piece of the economic system, what does that mean? That means now as the prices of things go up, you get to sell your products for more money. Like when you go to the grocery store and you got to pay more money, who benefits? The grocery store owners. If you go to the airlines and you got to buy a ticket to Cabo or to Cancun, who benefits? It's the airline company who gets to sell the ticket for more money. If you go and rent an apartment, who benefits? It's the landlord who owns the apartment. And that's why now it is so important for you to understand this, because when you have these things happen like inflation, there's a winner and there's a loser. The loser is the person who's got to pay the price. And every single person in the world is a consumer. Consumers are people that got to spend money to buy things. Every single person, rich people, middle class people, poor people, everybody's a consumer. But only some people break out of just being a consumer and actually become a producer as well. Only some people break out of this and also become the asset owners. And the people that benefit from the way the system works are the asset owners, not just the consumers. See, everybody's a consumer, but most people get stuck as just consumers. Now, why does that happen? Most of us are never taught this. I didn't grow up learning about money. I didn't grow up learning about financial education. I didn't grow up learning about how our economic system works. And if you don't learn this, if no one tells you this, where are you going to learn it? Well, thankfully, we have YouTube University where you can go out and learn this, but you had to go out of your way to actually watch this video. Thank you for doing that, by the way. Now, this is where a lot of people will say, but either that's difficult, I can't do that, or that takes a lot of money. And this is where you need to understand it doesn't take a lot of money to do this. You don't have to have all this immense education to do this. It can be very simple. And you can start with as little as $1, $10, $100, $1,000. It does not matter. But the key is that you have to get started. You don't have to go out and start buying huge businesses and buying huge pieces of real estate. You don't need millions of dollars to do this. That's what a lot of people assume, which holds a lot of people back. But you have to start taking some of the money that you're earning and stop spending all of this money, because anytime you spend money, somebody else makes money. That means you got to stop spending all of your money to make everybody else rich. Then you got to take some of this money and invest it. Because guess what? The stock market allows regular people, people like you, me, and anybody else, to own a piece of the airline companies. It allows you to own a piece of grocery store companies. It allows you to own a piece of the companies that make our economy what it is. And this is where now you have to understand that the key to doing this is first understanding you can't just continue being a consumer. You can't continue just spending all of your money into the economic system. You have to own a piece of the economic system. And now, once you understand that you have to own a piece of the economic system, the question is, well, what do you buy? And now you got to start understanding, well, there's a lot of different options. You can go out and invest in businesses, start a business. You can invest in stocks. You can invest in real estate. And this is where you have to find, well, what is the right passion for you? How much money do you need to get started? How much time are you willing to put in? How much risk are you willing to take? Because even when it comes to the stock market, you can go out and invest in individual companies, which is what everybody thinks you need to do, or you can invest in a fund that gives you exposure to the stock market, or you can invest in a fund that gives you exposure to the largest 500 companies. And this is where now it all comes down to what is the right option for you. And this is what financial education is all about. But in order for this financial education to even be valuable, you have to understand that this economic system is designed to make only certain people wealthy. It makes those wealthy who understand the system and who understand the financial education. And most people run through this economic system without understanding how our economic system works and without understanding an ounce of financial education. So what happens? You make money and you go and blow this money on a new BMW, on some new Gucci. You blow this money to look like you're rich, and the people that look like they're rich are oftentimes the people that are making everybody else rich. I want you to be one of the people that actually become rich, and that's where real financial education comes into play. Now, I told you in the beginning of this video that if you stuck with me to the end, I will show you how you can get a copy of How to Build Wealth as an Investor. This is an ebook written by my team at Briefs Media. If you want to learn more about how you can start investing, this ebook has a ton of value. It starts from the basics of how do you build a mindset of an investor, and then how do you save your first couple $1,000s. But then it starts to get more advanced on things like how do you start investing your money? What are different assets that you can invest in? How can you generate cash flow? What are different ways to invest your money? Then it gets even more advanced to how do you spend your money smartly? How do you earn more money? And how do you protect your assets? There is a ton of value in this ebook. You can read this ebook for free. And all you got to do if you want to get this ebook for free is click the link down in the description below, or by going to briefs.co/ebook, and you can get a copy of this ebook for yourself. There's one mistake that so many Americans are making at payday, which is not only destroying your finances, it's keeping so many Americans poor. And no, it's not missing the contribution to your 401k or not investing for retirement. It's much worse than that. Take a look. I was reading an article on Startup Info titled How Millennials Are Approaching Payday Loans. And the